rates just went down. So does that mean your home price is about to shoot back up? A lot of sellers are asking me this right now, and I'll tell you the truth. It doesn't work that way. Before you start celebrating and thinking you can tack on another $20,000 to your asking price, let's break down what this rate cut really means and why interest rates are just one piece of the puzzle. If you're new here, I'm Lily Vallario, a Maryland real estate agent with 21 years of experience, and I give you straightforward, no fluff real estate advice that applies no matter where you live. If you appreciate honesty in a world full of hype, hit that subscribe button and help me reach my goal of 2,000 subscribers. So here's the big headline everyone's talking about. The Federal Reserve just cut rates by 0.25%. And the second that news hit, my phone started blowing up. Calls, texts, emails, mostly from my sellers who are already preparing their homes for the market. We've signed listing agreements, we're staging, we're lining up photos, and suddenly they're asking, Lily, can we bump up our price by $10,000 now that the rates dropped? Do you think we're going to see multiple offers and the home will be sold this weekend? I'm also hearing from homeowners who just bought a few years ago and they're asking if now is the time to sell. The problem is many of them don't even have enough equity yet. And while I understand why they think this changes everything, it doesn't. Here's the truth. A small rate cut doesn't flip us into a seller's market overnight. It doesn't mean buyers are suddenly going to go flood the market with blank checks. Yes, the Fed cut rates, but here's why. The job market is slowing. Unemployment is creeping up, and they're trying to give the economy a little boost. This wasn't about housing values shooting up. It was about keeping the economy steady. Now, of course, you're going to see lenders and realtors out there saying that this is the best time to buy because they need deals to happen. They need to put food on the table. And if they don't close deals, they can't. And that's where sellers get confused, thinking, great, I can ask more for my home. I'll get multiple offers. I'll cash in big. But let me be very clear. This is not reality. A 0.25-point rate cut doesn't erase affordability challenges. It doesn't reset the market, and it doesn't bring back the pandemic frenzy. Here's the thing sellers sometimes forget. Buyers don't shop based on the sticker price of your house. They shop based on what the house is going to cost them every single month. So yes, a rate cut might save a buyer $100, maybe $200 a month on their mortgage payment, and that might pull a few buyers back into the market. But if sellers all rush to raise their asking price just because we had there was a rate cut or the rates went down, that saving is completely gone. Let me make this really simple. Imagine a buyer is looking at a $500,000 home. At today's rate, their payment works out to be around $3,100 a month. But their budget maxes out at $3,000, so they're just out of reach. Now, if rates drop a little, that same house might come down closer to $3,000 a month. Great, that puts it back within their budget. But if sellers raise their prices by $10,000 or even $15,000 just because rates dropped, that buyer's payment shoots right back up over budget again. So we're right back where we started. That's what I'm telling everyone, that a small rate cut doesn't automatically raise home values. It doesn't fix affordability. Buyers are still doing the math on their monthly payment, not just the asking price. Now let's talk about the pandemic for a second. That market was unlike anything anyone had ever seen in real estate. Not just me in 21 years, but anyone in history. It was a once-in-a-lifetime storm. Mortgage rates dropped so low that it was like free money. It was almost like you having a rich uncle saying, here, take that money and just pay me back in little installments for the next 30 years. Buyers couldn't believe how cheap borrowing was. On top of that, people were getting stimulus checks. And let's be honest, some people received money they didn't even need. Restaurants and struggling businesses, sure, they needed help. But plenty of people got checks when their income hadn't gone down at all. Even real estate professionals, we were busier than ever, working 12 to 15 hours a day just to keep up with demand, selling more houses than any time in their life or career. So suddenly, a lot of people had money in their accounts they'd never seen before. For some, it was their first $20 or even $30,000 they'd ever have had sitting in their savings. And what did they go do? They went out and bought houses. They chased the dream of home ownership, often bigger and nicer than they ever thought possible. It was chaos. 10, 15, 20 offers, waived inspections, waived appraisals, buyers throwing crazy money at homes. We even had to invent new forms. Remember the appraisal gap addendum? In my first 17 years in real estate, I never once used one because it didn't even exist. And suddenly every single offer had one. But here's the point sellers need to understand. That market was artificial. It was fueled by free money and an emergency situation that should never be used as a measuring stick for what's normal. Yes, it helped a lot of families buy homes with great rates, but it also caused the storm we're in now. Inflation, affordability problems, and home prices that outpace what normal jobs can support. That market is now gone. It's not coming back because of a tiny quarter-point rate cut. We are back in a normal market, one where pricing, presentation, and strategy matter more than ever. Okay, I'm hyped and I want to hear from you. Drop a comment below. Do you think lower rates automatically push prices up, or do you agree that buyers are still watching affordability first? This is where a lot of people get tripped up. Not just sellers, but buyers too. You see the headline, the Fed cut rates, and everyone assumes mortgage rates just dropped. But that's not how it works. The Fed sets short-term rates, credit cards, auto loans, home equity lines. Mortgage rates are different. They follow the bond market, especially the 10-year Treasury. So even when the Fed cuts rates, mortgage rates don't always move. Sometimes they stay flat, and sometimes they even tick up. That's why you just can't read what the headline says and assume that home loans instantly got cheaper. So even when mortgage rates do dip a little, buyers today are still cautious. They're looking at their jobs, their budgets, their monthly payments. Unemployment is inching up. Fewer jobs are being added. That's the Fed's real concern, not home prices. So yes, a lower rate can help a little, but it doesn't erase the fact that homes are expensive, buyers are picky, and affordability is stretched. That's the reality we're in. A quick question. Were you in the market during those 2021 bidding wars? Did you see 10, 15 offers on homes in your neighborhood? Drop a comment below. I'd love to compare notes. Let me briefly zoom in on Maryland. Active listings here are up about 20% year over year. More choices means more competition among sellers. And months of supply is about 3 months. Not sky high, but definitely not pandemic tight. And buyers here are looking carefully. They're comparing homes. They're not rushing into overpaying. So sellers, this is not a wait 2 months and you'll make more market. If you need to sell, now is the time to price right and present right. I hear this a lot. Lily, I think I'll wait until spring 2026. We think that's when the market is going to get better. Here's the truth. There's no magic switch in March that makes buyers pay more. If anything, more sellers list in the spring, which creates more competition. So waiting doesn't guarantee more money. What sells a home now is the 3 Ps. Price, set where buyers are today. Position, market your home to the right buyers. And presentation, make it shine online and in person. That works in September, in February, and in June. Timing headlines won't. So here's the bottom line. Today's rate cut is a nice boost for buyers. It might bring in a few more buyers to the market, absolutely yes, but it doesn't automatically raise your home's value. If you're selling, forget chasing headlines. Focus on what works. Price, position, and presentation. That's it. That's how you will win in today's market. If this video was helpful, hit that like button and drop your thoughts in the comments below. And subscribe so you don't miss any of my weekly updates. And if you're thinking about selling, let's talk. I'd love to build you a clear, no fluff plan to get your home sold for the maximum amount of money. Thanks again for watching. I'm Lily Vallario, and I'll see you in the next one. Bye.